But remember, tomorrow you don't have to listen just to us because we have the Treasurer of State's office coming, so you don't want to miss that. Okay, I'm going to go over new legislation. This may be, and I've told everybody so far this year, this may be the shortest one I've ever done. Hold down the cheering until I'm done. I know this is like the least favorite thing to go through, but there really wasn't a lot of new legislation this year. And I'm sure that's a relief because everything else going on with COVID, we just don't need a whole lot more added to our list of things to do. So pretty much I'm mirroring what I told the auditors. There's some differences because there's some things that really don't affect the Treasurer's office directly that I might have mentioned to the auditors, but you can always see their presentation on their website. It's available to view. Also, the special edition of the county bulletin is on the website, and it's all of the legislation I thought had some impact on the county, whether it was treasurer, clerk, recorder, auditor, surveyor, sheriff. So that's another thing you can also look at. I'm just giving this map for information. It probably doesn't really affect your office directly in any way. But what this bill does is allow a county to exclude road projects, regardless of the cost, from the consideration of it as a controlled project. And if they don't have to consider it a controlled project, they don't have to go through a petition and remonstrance process. So it streamlines that. So I just wanted you to be aware of that. Going forward, that the county is able to do their, it's detailed out here what they're allowed to do with road projects without having to be a controlled project. This bill is to further protect our public safety personnel from any offender that might be seeking some sort of retaliation. The protection now includes probation officers, community corrections officers, and their family members. It also extends the definition of an offender to include someone that has been arrested in addition to being convicted. So even though they're not convicted, if they've been arrested, they fit the definition of offender. And what that means is that expands what records are confidential to an offender. So for the offender, and again, that includes the person themselves, a relative or agent of that person, is making public record requests for information that contain personal information related to a protected person, correctional officer, probation officer, community corrections officer, law enforcement judge, victim of a crime, a family member of any of these people. It is confidential. It does not have to be disclosed. We're going to come back to this kind of topic again on a later slide dealing with the your property tax rolls. 1065 was on various tax matters. The first one is on the personal property overpayment chapter, and it has added some language. So, you know, the purpose of this chapter was if you find property that has been omitted or undervalued, you can, assessment can be corrected and the proper tax collected. It's the whole reason that you have it. Section 10 of this chapter now deals with discovery that the property was overreported and the assessment should have been lowered. This section requires the assessing individual to correct the error and provide for a refund or credit of any overpayment. And what the House bill added is that if the assessing official does not make that correction, the property owners have the right to appeal to the PETA-BOA. Or if the PETA-BOA does not do it, they have the right to appeal to the Indiana Board of Tax Review. So it just gives them more avenues to take action if they feel that they have not been treated fairly. The second one on here is on the LIT Council, so your local income tax council. If you were a former Coet County, I think there's 6 or 7 counties that are affected by this. It's changing how that vote works. It used to you voted in blocks, so the city was assigned so many blocks, the county was assigned so many votes. And what they've done, at least until 5/31/21, so really just a year, to increase the local income tax, each person on the tax council has a separate vote. They don't have to vote as a block, as a city or a county. So it allows them to vote individually. And 36714 was also addressed in this bill. It has changes to establishing the residential TIF districts, for how long those TIFs can exist, and the direct consultation with schools that might be affected. They have to reach out to the schools before they can establish a residential TIF. Again, you don't have to deal with that directly. Just some knowledge that you know, and it may slow down the number of residential TIFs, which does affect your property tax settlement. House Bill 1108 was State Board of Accounts. And I think there was some misconception on this, and this was some of the feedback that I got, that this was giving us a lot more than what it is. What it does allow is not us, but does allow for a court to take action different than was allowed in the past. So if you fail to file a report required by this chapter, which is like the annual financial report, fail to follow the state examiner's directives, provide records requested for audit, refuse to work with your field examiner when they come into audit, we can enforce compliance by requesting a court to order a forfeiture of office or now a civil fine. It used to just be forfeiture of office. It doesn't give us any additional authority that we didn't already have. It just allows a secondary action the court can take. And so instead of taking you out of office, they can implement that fine. And it's a pretty big fine, so, and that is, you're personally responsible for that. It's not something that the county would pay. It also added those penalties if you fail to keep proper records. So we come in and you haven't kept any records, which would be very, very sad, and I hope would never happen. There are penalties for that. It does change the timing for risk-based audits that have to be performed at least every 4 years. Certain risk-based criteria allow the examinations to be performed more frequently than 4 years. 4 years is the absolute limit. This doesn't affect counties, but some of your smaller districts. And so currently, if you have a newly elected officer, if the AFRs are not being filed, if they're filed and they're just a mess, materially incorrect, we need to go in and do the audit more often. Again, counties get done every year anyway, so this won't affect you directly. Management letters was the last thing that addressed, and Ricky went over that a little bit yesterday. The management letter is the confidential letter that goes to your governing board with a finding that does not appear in the public report, but does go to your governing board. We've done that for several years now. This is just putting it in the code that such a thing actually exists. But it did include language that if a non-compliance from a management letter subsequently requires corrective action plan, so it moves, as she said, if you get a management letter and the finding is not corrected and the next audit it moves to a audit report, it's going to stay in there that you were told by management letter to correct this and failed to do so. So just be aware of that. And the rest of the slides I have, and there are really not that many, are on House Bill 1113, which was DLGF's bill. It's one of like the longest, I think, second to the budget. And I just wanted to make you aware of what was in there. They did a webinar on this, so if you were fortunate enough to be able to watch that or maybe go back and see it on their legislation, and they have several memos that you can go to their website and find out about more details about this. So I'm just giving you an idea what exists. It's really, if you want clarification on it, you really need to go back to DLGF for that. Okay. The deduction for disabled veterans over 65 and circuit breaker, and you're probably aware of this because this was an issue last year when it was first changed. What it basically means is that once an individual qualifies for the over 65 deduction, the over 65 circuit breaker credit, or the disabled veterans deduction, that individual will always qualify as long as the individual meets all the other deduction criteria and the property is not sold or modified by a physical improvement. So there was some question last year whether they really got to keep it. I mean, it just talked about trending and didn't really talk about the reassessment. So now it's addressing that. For each of these deductions and credits, one of the requirements is that the assessed value of the property is less than $200,000, and within this legislative change, even if the assessed value exceeds $200,000 in the future because of reassessment or trending, unless the increase was directly due to improvements on the property. Obviously, if they improve the property, increase their assessed value, then it's going to go up. You are not going to show that assessed value as making them ineligible for this deduction. Okay, and this is effective with assessments after December 31st, 2019. Okay, it also addresses Indiana Code 6-1.1-16 on changes to personal property assessment for business personal property appeals. So a taxpayer may appeal a change in the assessed value under this section as follows. Taxpayer may appeal a change in the assessed value under subsection A1 or A2 by filing a written notice of review with the County Property Tax Assessment Board, the PTABOA, of Appeals under 6-1.1-15-3. A taxpayer may appeal a change in the assessed value under subsection A3 by filing a written notice of review with the Indiana Board of Tax Review. And that is effective July 1st. We did have a section of statute that talked about property tax refunds that were over $100,000 and the ability to spread those out at the auditor's discretion rather than have to refund them all at one time, and that expired. So 1113 also addressed that. It extends the authority for the county auditors to apply credits for larger refunds, and now it has a 3-tier approach that's on here. So if your refund is at least $500,000 but less than $5 million, it can be applied over 5 years or less. If the refund is over $5 million but less than $10 million, the credit may be applied over 7 years or less, and it's over $10 million, then it can be applied over 10 years. And I hope you never have that. They also addressed additional appropriations. As you know, DLGF, or you should know, DLGF approves any additional appropriations to your budgeted funds that are on your certified budget, so your tax funds, the general fund, for example. And I think there was an issue in the past where counties were sometimes doing additional appropriations and then kind of batching them up and sending them all at one time, getting the approval, but then not sending them in. And so the statute has now changed. If your county does an additional appropriation, they have to submit it to DLGF no later than 15 days after the adoption. If they do not submit it within the 15 days, you got to go through the whole process again. So again, it's trying to keep from bottlenecking. And I guess, you know, from their perspective, if they're getting all of them in November and December when they're trying to get budgets done, it can be very difficult to work on, keep those up to date and keep current with the budgeting requirements. Okay. It also amended the section on tax bills, 6-1.1-22-8.1, and it clarifies now that the remittance coupon is a required portion of the property tax comparison statement, the TS1, that is prescribed by DLGF, so it gives them statutory control over that coupon. Beginning with taxes due in 2021, the property tax bills must contain information on how the taxpayer can obtain information regarding the taxpayer's notice of assessment or reassessment. So there's new information that does have to be included on that, on those tax bills. It also amended 6-1.1-24-5.3 on ineligible purchasers on tax sales. That is not easy to say. Ineligible purchasers on tax sales, and added the language that a member of a limited liability company, an LLC, and a director of a corporation, and adds additional language that there is a statement that needs to be signed by bidders at a tax sale.
A couple questions. Is there standard verbiage for the new wording on tax bills?
I'm going to assume there will be, but it will come from DLGF.
Along those lines, is DLGF going to put the info on the TS1?
I have not seen it yet. Usually usually by the end of the year, or first of the year, we get it for approval. But I haven't seen it, so I really can't answer that. It would be best to discuss that with DLGF, where they're at in the process. I don't know. Sorry, I knew that was going to be it. But yeah, I don't know what they're going forward. I'm assuming they're going to have that information on there. This is also adding that a person has interest in an unsafe building or unsafe premises, or someone with a relationship to a person that has that may not bid or purchase property under tax sale. It also includes people who owe delinquent taxes, special assessments, penalties, interest, or costs directly attributed to prior tax sale are not eligible to purchase property at a tax sale. The phrase that has to be added per statute, and I quote, "I also affirm that I am not purchasing tracts or items of real property on behalf of or as an agent for a person who is prohibited from purchasing at a tax sale." And that's in the statute, so you can look that up. I'm doing pretty good.
You're doing very good.
One more. This has got to be the shortest new ledge I've ever done. Okay, and we talked earlier about protecting protected person and for public safety mainly, but also there was a whole list that I went through. In addition to that, which is that was in the public records statute, so that's 514.3 on access to public records. There is a statute in 36, which is local government. 36-1-8.5-7 on protected persons. And we have received emails on this in the past, so I wanted to go over it a little bit. This is dealing with restricting address information for a covered person. A covered person includes a judge, law enforcement officer, victim of domestic violence, public official, surviving spouse of a law enforcement officer killed in the line of duty, or an employee of the Department of Child Services, so it's slightly different than 514.3. But these people are allowed to submit a written request that restricts their address from a public property database internet website. So we're talking, if your property tax records are accessible online for free, anyone can go in and look at them. It has to be, the public property database is defined as an internet website that is available to the general public over the internet, does not require a registration or subscription or payment of a fee or the creation of a username and password to search it, connects a covered person's home address to the covered person's name. So the search of the website for that covered person's name would give the person searching their address. The change in the bill, just be aware that this is different than that, but the change in the bill is that there used to be a state form they would fill out to give you, and now they are not required. They're not going to have a state form. It's not going to exist anymore. So they're just going to have to give you something in writing to request that. They do have to request it. It's not automatic. You don't have to figure out who everybody in your county might be that would fall under this. They have to submit the written request to you. Then you have to make provisions to make sure that their address is not connected to their name. And that is it.
Wow.
I told you it wouldn't take me long.
Treasurers can no longer find any restricted records in Lao tax database. Is this okay?
Can no longer find?
Find any restricted records in the Lao tax database.
If the protected records are restricted, that would be good. I don't know why the treasurer would not be. I'm not sure of the question.
Once restricted, the properties are not findable.
Oh, that's what you want. That's what you want.
Okay. There was some chatter in here I didn't, talking about tax sale and basically whether or not to have one. But I think mostly it was just chatter amongst them. Okay, so
Right, here's one. I have a council member who asked about a delay in tax sales. I told him there's no delay due to COVID and our tax sale is still a go. He's unhappy about this. Has anyone else had issues with tax sales?
yeah, and there's a couple of them.
Oh, they're all answering that. Okay, good.
So I think it's kind of
self-answering. I
Self-answering.
love those questions.
so. Well, we got 7 minutes to spare, so let me do my little spiel, and then I guess we'll let you out of here kind of early today. Oh, sorry. All right, so I wanted to kind of go over just a few reminders. We're at the end of day 2. One is presentations. Presentations are on our website on the treasurer's page. Please scroll down to presentations and training materials. If you click the gray arrow to the right, it will kind of accordion style menu will pop down. You should be able to see virtual conference 2020, and those links should be there, okay? So this quick reminder, I know that we just put up yesterday afternoon the Treasurer of State's PowerPoint presentation that they will be going over tomorrow. So if you want that for first thing in the morning, please make sure you go get that and print it. You do not have to print it. You don't have to get it if you don't want it, just if you do, all right? Again, you use a separate link to get into today. You'll have a separate link to get into tomorrow. If that link is, you can't find it, let me know. Really, this is just for treasurers. Treasurers, once I give you the link, then you share it with your deputies and all of that. So if you as a treasurer don't have a link for tomorrow, let me know, okay? And we'll do what we can to get you one. As a reminder, Treasurer of State will be here first thing in the morning, their office. We already heard from Kelly Mitchell yesterday, so she will not be back. But Cindy Barger and Kim Logan will be here in the morning. We've got some virtually. It will not be here, but virtually they will be here in the morning. We have a couple videos that they're going to show. They've got, I know that there's one video, or there's 2 videos, but Kim did a video, and then she'll be here to answer questions. There's another video, and I forget who did that one. And then Cindy has our presentation, and she's going to do a live presentation to be here to answer questions first thing in the morning. So we will start promptly at 9 a.m. tomorrow as well. Make sure. No, I probably cannot.
What?
Can Ricky speak if you hold her hand?
No, it would be a very silent, long, you would hear the crickets chirping.
You understand how hard this is for me? I actually want to like stand and walk, and I can't. I am a mover. That's how I express myself every day. So anyway, we appreciate you all tuning in today. We hope that you come back and you join us tomorrow for the last day. We hope you enjoyed the videos today. We hope you got some great information out of it. If something comes up and you need anything, we are working this afternoon. So send us an email. Lori and I will try to get back to you as soon as possible. And with that, I guess we'll let you all go. Have a great lunch, a great rest of your afternoon, and we'll see you tomorrow. Maybe we'll have donuts.
I doubt it.
We won't. All right, everybody. See you later.
Bye.